Hi everybody, it's Dr. Robinson. This is the January 5th, 2024 meeting of the Money Masters Investment Club. It's been a while since I've done any kind of updates or anything, and I know a lot of people are kind of anxious to see the numbers and stuff. But for most of you, you know that I was sick. I ended up having pneumonia. I spent actually Christmas in the hospital too. But I did spend about 11 or 12 days where I didn't work at all. So I wasn't able to do anything for the last 2 weeks of December, really up until the New Year. So it's been a while since I've updated anything, and it's been a while since I've done any actual work. So I am going to show you the results. I've got the results. I've got we've got our quarterly books and everything done too. So I'm going to kind of give you those numbers as well. I do want to prepare you. Our December was not a good December. And part of the reason it was, there was actually 2 points to the reason our December was lousy. I did have a couple of lousy trades in the beginning of the month, and normally we don't worry too much about it because you can make them up. But once I got sick and I wasn't able to trade, I wasn't able to make up any of those losses. So the losses ended up staying on the books. So our December was a lousy month, and the losses were pretty bad, and they did kind of do a little bit of damage to our quarterly return for the fourth quarter. Having said that, I wanted to share with you a little bit about why the market was so tough in the last quarter. And it wasn't just me, by the way. It wasn't just being sick and stuff, but the last quarter was a terrible quarter. It wasn't so much the entire quarter. It was mostly December, late November, early December that was the bad part of the trading period. And as you can see, this is a copy of the VIX, or this is a chart of the VIX. And you can see where prior to October, November, where the VIX was at. And we like the VIX up in those levels in 17s and 18s and 19s. Our sweet spot's kind of the 20. But when the VIX falls, and it fell a couple of times below 12, you can see there on the chart, but it stayed right around 12 for the most part. A 12 VIX is so low that there's just no volatility. And what happens to us when we're trading options on a low VIX, it doesn't happen this often, but it's just a combination of the Christmas season where there's low volumes and there's no real impetus for anyone to push the market around, whether it's the institutional investors or retail investors or anything. So the market just kind of trades in a narrow range all day. And we saw that if you were on the meetings with us every day, you saw the market moving very slowly. And I mean it's so slow, guys, it would take an hour to move 10 or 15 cents. So when the market moves that slow, it's just dangerous to trade. And what happens here is if there is a piece of news that comes out or something happens and the market spikes in the wrong direction, our tendency is to try to strangle the trade. And if you strangle it, when the VIX is at 18 and you strangle, no harm because the market's going to move in the other direction and you can make up any losses from the gains on the other side. But when the market is so slow either way, if you strangle, you end up losing money on both sides because the market won't go up or down to cover the cost of both positions. Remember, when you strangle it, you're buying calls and puts. And if you do that, you've got some extra expenses. And to get the market to move beyond those expenses, it kind of becomes tough to do. So we end up trying to do stupid things. We may double down or we may try to do a different type of strangle or stuff. And it just compounds itself and gets us into a mess. And that's actually what happened earlier in the month with me. Now, normally it's not that big of a deal. But again, once you get sick and you've been out for 11 or 12 days and you don't trade at all, and even on the days you do trade, you're not feeling well and you're not trading as much. Maybe you trade in the morning and then you have to take the rest of the day off. You can't make up the losses that you had on that, on the few losses you have. So you don't have any winners to kind of offset those losses. So you can see it's been flat. It is starting to peak a little bit. We did have the VIX, even as yesterday, hit the 14 range. So the market's kind of got off to a lousy start for the year in terms of the market's been coming down. It's well down or well off its highs from just even 2 weeks ago. I'm hoping it continues. I don't think it's probably going to until March or April. But in any event, we are starting to see a lot more activity. But more importantly, the volume is coming back. Once the volume comes back, we shouldn't have any problems with strangles if we need to strangle. But it has caused us to go through a period of where it's just the market is so slow. And I mean, you quite literally have to wait an hour, sometimes 2 hours to get 15 or 20 cents. Some of the guys have been in the trades over the last few weeks or so, especially getting into a strangle. You can be in a strangle for 6 hours before the market breaks one way or the other. So it's just been a terrible time to trade. But that should go away now, now that the Christmas holiday season is over. So I did want to show you that. We like a lot of people, you talk to retail investors or you talk to other investors and they tell you how they don't like volatility in the markets. And of course, we need volatility. And when the volatility falls to a 12 or 11, and that's about as low as it ever really goes, by the way, that just simply means that the difference between the high and the low of a market in any one day is maybe 3 or 4 points. And 3 or 4 points translates into maybe 15 cents for us in terms of a profit margin on a trade. So we need something bigger than that. We like to see 18s and 20s on the VIX. That gives us a pretty good run. We can get 40 and 50 cent runs, even more than that sometimes. But so the higher the VIX, the better for us. But right now the VIX is at a low level. It is starting to come back up a little bit. That's good news. So I think going forward here, we should be back into good shape. But having said that, that's where we're at for the moment in terms of what the market's been doing. Let's look at the numbers for the quarter, and I'm sorry, for the year, and then we'll look at the current NAV because everybody's been kind of sending me texts and stuff about the current NAV. So for the year, we had what I think is a mediocre year. It's actually a pretty good year, but we ended up having a pretty mediocre year compared to what we would normally do. And I can't blame it all on December. There were a couple of moments where there were other times during the year where we just struggled a little bit because either the VIX was doing something weird or maybe somebody was, we had a lot of Fed speakers, especially in the last quarter, but we've had a lot of Fed speakers talking a lot, and that stuff just stirs up the market. And if you happen to be in a trade, it's hard to get out of those trades when they start talking. But in any event, we started the year at 26.51 on the NAV. Our ending NAV on 12/29 was 31.71. So our gain for the year was $5.20. Overall, pretty, I'm not real happy with it. Of course, it's better than a loss. But our year-to-date return, 19.62% for the year. I will say this is the first year in over a decade that I haven't outpaced the S&P. The S&P this year returned 23.7, I think it was 23.78. Let's call it 24. So basically, we got a 20% versus the market's at 24. So the market beat us a little bit. Wouldn't have been true if I hadn't gotten sick in December, I don't think. But who knows, because the VIX never did really pop the entire month, so it might have been even more losses potentially. So at the end of the day, who knows? But overall for the year, up 19.62%. So I'm pretty happy with it. Not as happy as I would have been if I'd been able to finish out the year and if we hadn't had some of those losses we had in early December. But for the current NAV, now this is the NAV as of effectively January 1. And of course, we are now on January 5th. So the January 5th, I did do a full week of trading this week. I did do doing reduced volumes. There was a couple of days where I did a full, what I call a full load of options, where I do 1,000 contracts at a time. But a lot of trades, I just did the 450 because, again, I'm kind of getting back to work and still coughing a little bit from day to day. And I don't want to get to the point where I'm stressing myself out too much. I'm just trying to relax a little bit, get back into the flow of things. But NAV, as of Friday yesterday, 32.41. So we're back to profitability. We've kind of put December behind us, and from here, I'm hoping the VIX will continue to rise a little bit, and we can kind of go forward with that. But that's all I have for this week, guys. Hope everybody had a nice Christmas and a good New Year. But and I'm hoping we're going to have a better New Year. But other than that, that's all I have. And we'll see you, for those of you on the meetings, we'll see you on Monday. And for the others, we'll see you in a week or so. Thanks.